might start with some intros. So I always ask people to introduce themselves because you do far more justice than I ever could. So Alexis, go for it.
Yeah, thanks a lot for the invitation.
Welcome.
Hi, I'm Alexis. I'm a partner at LR, full stack investment platform in B2B software in Europe. As you could guess with my accent, I'm French and really happy to be there.
Fantastic.
So I guess it's me. Hello, everyone. My name is Agata Noika. I'm the managing partner of AI Visionaries, which is an accelerator built with Google as accelerating growth of AI first and deep tech startups. Previous to that, I've been a VC investor, and before that, I built 2 technology companies.
Amazing.
Yeah. Hi, everyone. This is Baturay. I'm a partner at Beck Ventures. Beck is a global early-stage VC fund focusing on pre-seed, seed, Series A, and selectively Series B deals. We have a special focus on teams originating from the Central and Eastern European region, including the diaspora founders.
Amazing. Agata, I'll start with you. AI Visionaries, you focus on AI first, but also deep tech, which are not always the same thing. So what are you seeing in the space in the startups you're dealing with, and what are they dealing with at the moment?
Yeah, so on one hand, definitely it's never been a better time to be a founder. It's so much easier to build a company. On the other hand, it's never been probably the harder, and I feel that we've covered some points already in the previous panels. But definitely there is an abundance of capital, and capital has become global. So we've seen with OpenAI raising 120 billion rounds. Again, it's staggering to even talk about those sort of numbers. But then when you look at the early stage financing, it's really selective, and it's concentrated around very differentiated founders and those that are able to prove that acceleration of growth early on. On the other hand, which is, again, kind of you can see works in a different direction, those AI-first companies require so much more capital to get off the ground, precisely because obviously access to GPU or a GPU in general is very expensive, and then they have this big storage, data storage challenges as well. So they are constantly juggling between experimentation and growth, and kind of sustaining that growth with very limited runway. So, and the third that I want to mention, just to not take too much spotlight, is talent. Again, London is a great example of that. We saw OpenAI announcing its headquarters finally in London. We have Anthropic, and then we have those scale-ups that are also attracting, or first of all, they are very much well capitalized, so they can attract technical talent. And to really compete, and that hasn't really changed, you need access to experienced AI talent. And when you look at even a global picture, that talent is scarce. So I on a daily basis, pretty much these days, I speak with founders who even raise 6 million, 10 million pre-seed rounds, who are struggling to attract technical talent.
Oh my gosh, I just imagine what the competitive salaries must be like if they're struggling.
Exactly, yeah.
But it's all right. Central Eastern Europe, an area that I'm quite enamored with. Poland is, and particularly Warsaw, is always one of my top countries for this year. I say everybody should be putting their attention there, personally, personal bias. So what are you seeing? What's gaining traction in a real sense with the startups you're investing, as opposed to companies that, are spinning up their demos or their slick pitch decks, all this kind of stuff? Like, where's the real traction?
Honestly, I don't see a meaningful difference when I look at our universe of founders versus the, let's say, other regions. Of course, it's impossible to deny that most of the AI talent is concentrated in the Silicon Valley. That's true, but when we look at these teams that are actually based in the CE region, they are always keeping up with the latest developments. I think the majority of our companies we are looking at are building vertical AI applications, namely using the available AI technologies, foundation models, or agentic technologies to solve problems in different enterprises or SMEs in different industries, because that also aligns very well with the region's technical or strategic advantages. Those regions have enormous experience in building enterprise software, and all of that know-how and experience is directly relatable to the vertical AI companies we see.
Yeah, absolutely. And Agata, I'm curious. I mean, you've been working with these AI native founders since, I guess, the genesis of ChatGPT. I mean, what's been the shift since then? That's, what, 3 years? Something?
Yes, so it's very interesting. I had the luxury of following founders and how they build with AI since pretty much beginning, at least the 3.0 era beginning. And I would say the past 12 months have been really transformational from the perspective that we've seen for the first time founders, truly AI native founders. And how I define AI native are those that are building from ground up with AI, with agentic AI and AI systems in mind. So what is very interesting as a consequence, on one hand, I'm seeing that the average age of a founder has dropped. So those type of founders who come out of university or even obviously drop out as a cliche as it sounds from universities tend to develop more horizontal solutions, and they struggle with go-to-market and actually getting that access to the market that allows them to accelerate growth. Then on the other hand of the spectrum, which is quite interesting and maybe surprising to some people in the audience, I've definitely seen new cohort of founders coming from very experienced backgrounds, like where the average age is 55.
Oh, wow.
Yes. and they are brilliant because these are domain experts. They spend 20, 30 years they understand nuance of their industries. They have access to those go-to-market customers, and they leverage AI that allows them to get that go-to-market motion going. And the third kind of type of founders that I also see are second-time or third-time founders. So, and that is actually irrelevant whether they were successful before. If anything, I actually see, which is probably normal, I see those founders who got burned before. Probably they raised too much capital or too little capital, and capital was an issue for them to succeed. And now they're coming back exactly leveraging the fact that now they can build without that need at least to get started, because then things become complicated. But they have real advantage as well in the market.
So interesting, yeah. It's such interesting, 3 different categories of being interwoven in this. It's super interesting. Alexis, I mean, when I think about the AI stack, it's vast and it's complicated and comprehensive. Are there bits that, for you as an investor, they're still underbuilt that you're kind of wooing and looking for the golden startup to work in a space?
Yes, definitely. I mean, there are so many. So there are stuff that I don't want to invest for a simple reason. It's too competitive with OpenAI, Anthropic. There is absolutely no goal with me, with my fund, to go there. Which means that there are some underserved areas. The last panel was really revealing on that part. So us as investors, usually we shy away from services. And now, with the emergence of AI, you can actually build scalable business on top of AI. And I don't think there is no need to come back on that, but clearly an investment thesis. Another one, which is the AI FinOps, in the sense that, so 2 months ago, I was in Silicon Valley, and I was discussing with a lot of founders. And as you were mentioning, like, capital is abundant there. So only one objective, growing. Like, growth is the only word that they know. And when you discuss with them about gross margin, it was like an insult there. So they just are caring about what is the most powerful moment at the model, burning cash there, increase the top line. But when you try to protect yourself, it actually reminds me what happened in 2021, and you know that it won't be sustainable. So at some point in time, you will have a lot of conversations, discussions about how to optimize the cost. So I think optimization, the cost of AI, is an underserved topic right now because it's not a burning need, but I could bet like in 2 years, it'd be a way more important area.
Yeah, super interesting. So how do you approach your investment thesis, particularly when I think something we all know in this space, and anyone's welcome to chime in, of course, you do often have companies that are pretty parallel in terms of what they're offering. So what's the sticking point to choose one over another?
Excellent question. 10 years ago, it was totally a different answer in the sense that way easier to predict. So to come back on what you were saying, like it was easy for me to say, this is a massive trend, I could foresee, not that good at predicting, but the global direction. Now, it's changing every 2 weeks. So finding the right founder is really hard, and I think we really stick to what we know, which are the people. And it's really becoming more and more a people business in the sense that you have to sense their ultimate goal, and because since it's easier to build startups, which means that you have more people onto the starting line of the race. And you need not only to invest into the sprinters, but actually the people that are there to run a marathon.
I could add to that actually, because of AI, when you think about it, there's a recursive nature of AI or compounding nature of AI. And therefore, for me, apart from the team that hasn't really changed, there's also this element of their structural advantage, which very often tends to come down to data or some unique insight that over time structurally, so that it comes down to product, that product needs to be reinforcing that unique advantage, and it has to be now doing it on the recursive way. So again, taking the most of AI. And I think that founders that understand that, those that now use AI to solve the hardest problems they couldn't solve before, especially when it comes to those founders at seed, Series A, that originate from a different era. And then they plug AI to they maximize that recursive nature of AI that is embedded in their products. I think these founders are really, really interesting. So I'm looking for that sort of mindset and that sort of product strategy.
That's right. Have you got any thoughts?
I mean, I will reiterate some of the topics mentioned, but I think the teams that are the most successful in this new reality are the teams who can attract the best talent, because the competition for talent is significantly higher nowadays, and you can't always attract the best talent with better compensation packages, but you need to be able to motivate them about the story, vision, and also the culture. And secondly is obviously the speed of execution, speed of getting adapted to the changing dynamics. Every 3-6 months, something fundamental could change in the new reality. So teams that are very agile, great at listening to the market signals, customer signals, and quickly adapting to those new factors are, I think, the ones that are getting ahead of their competitors.
And maybe the way we frame exactly this question is, in 2 months, there'll be a new generation of model, like a next OpenAI, next Anthropic.
Exactly.
And how will change your business? And so that's why we are looking for people forward-looking, and also with the ability to adapt depending on the situation. And maybe coming back to the example of the previous panel, if there is a new video generation, how your company is taking advantage of this 2x in performance so that you deliver a 2x output because it will be the benchmark.
Yeah. And just a quick note on that, because I think that many people just see OpenAI and Anthropic as a competitor and almost like evil. Whereas I think there's
OpenAI on stage yesterday.
Whereas I actually personally see it as a huge opportunity for founders who can leverage that 120 billion will need to go somewhere, and it's going to go into enterprise. It's going to drive the entire adoption for those decision makers that you can, actually the same decision makers that you will be addressing. So there's a great favor they are doing right now.
But even if you look at Lovable, I mean, if you look at their data and the outputs they do, where they showcase non-technical founders and what they're building, particularly as you've all alluded to, of responding to industry challenges, the people that are in particular sectors that identify gaps. It's amazing.
Yeah,
right?
exactly.
It's high impact stuff at a low cost. Amazing. So, I mean, given we've got 6 minutes. I'm going to ask something a little bit different because I thought I wanted to flip it a little bit. When we talk about fundraising, we know whenever I come to these conferences, people are always looking for money. Startups are always asking me to, can you introduce me to the VCs? So what questions should startup founders be asking before they start fundraising? Where should they start with this realistically? And Bature, maybe you'd like
I mean, first of all, I assume they are convinced that they need to fundraise.
Yeah.
I think the most important question is who should invest in us? Picking the investor. And that question has different answers depending on your stage. But usually, especially recently, I see that in pre-seed and seed stages, the capital is very abundant. And investors are competing very hard to bet on the teams that have good pedigrees, good track record. Even at idea stage, pre-product stage, I think pre-seed and seed fundraising is super easy nowadays. But then the real challenge begins. Capital is just one factor. To get to the next stage, you need smart people around you. You need experienced people around you who can introduce you to best talent, best advisors, not necessarily customer or founder introduction, investor introductions. That's easy, but basically be there as a sounding board for you, a brainstorming partner for you, so that you can build with the capital. I think with all the abundance, most of the founders are focusing on the speed to get the money, but it's just a number on the, I think, bank account, but there are other important things as well.
Maybe I want to bring a nuance to the abundance of capital at the pre-seed and seed stage, because from what I observe, yes, if you look at the average amount invested, it seems to be huge, but when you look at the median, it's actually not that big. Yes. And you have a distribution when you have, I don't know if you have seen the Carta data on the top 5% valuation, I think at $175 million valuation at a seed stage, which is totally huge, and it has been increasing in 10x. So when you open your LinkedIn thread and you see all these great companies raising 50, 20 million without nothing, you say, oh, they are doing it. Why am I not doing it myself? Yeah. And I see hundreds of entrepreneurs actually struggling with their fundraising. And
me too.
And why? Because us as a VC, we have this FOMO lens, and we say, oh, this is the generational company that we cannot miss. And so on this kind of deal, massive competition. And everyone is fishing into the same pond.
Is there FOMO as well?
Yes, definitely. Yeah. I mean, it's a question of who is investing there, and I've never seen deals happen so fast, or maybe yes, in 2021. So we have seen the aftermath, and so also that's why I'm trying to go to fish into other ponds. Maybe some overlooked areas where I know there will be less competition, I'm taking more risk, but it's my job, it's to take risk and get some reward on it. So the only advice I give to founders is put yourself into the investor shoes and try to understand what are the constraints, what are the moods, and it definitely helps you into building a great storytelling that helps you into the fundraising.
Storytelling is such an unappreciated part of the whole deal, absolutely.
Can I just add one quick point on that? I've definitely had and seen deals happening now within 2 weeks for those pre-seed.
It's like the US.
Yeah, 2 weeks. No, exactly, and that's, I'm thinking about the UK-based funds. So it is absolutely possible now, and therefore, previously, let's say 3-4 years ago, there were all these accelerators about how to fundraise, pitch deck, everything has to be polished. Forget about all of that. What really matters is your commercial traction and momentum. So you always want to be fundraising on momentum, on reaching that first inflection point and seeing that you need to wrap up that round very fast. And otherwise it's going to slow you down. So this is the mindset founders prioritize. I still meet founders that prioritize fundraising too much, and therefore they struggle to maintain that momentum that is crucial for them to become that hot FOMO round.
How do you think about research? I mean, some VCs tell me if you're early and you don't have that industry background of, learned years of experience, you can get traction by talking to customers, getting a data set of knowledge of a pain point that you can address.
Yeah,
Is that something you look at?
And it's exactly those founders who exactly understand. So first of all, absolutely industry. This is why it's not an accident that 55-year-old, we have this uprise of 55-year-old founders, is because that nuance, they have it from day one.
Yeah.
So, and then those horizontal founders end up a little bit struggling, but they also tend to be much more hungry and much more open for feedback. They have less ego, let's say, and therefore I would say the challenges are faced by those in the middle. But absolutely, being close to the customers, understanding those nuances, and really understanding that you don't need to automate to provide high ROI. It's more about mapping to your customer's journey and really understanding how they work. So those founders who are open and to learn really can build it as their advantage.
Amazing. Oh man, we're out of time. Got to tell another 10 minutes. Damn. It's such an interesting conversation. Thank you so much, everybody, for joining me. Absolute pleasure.
Thank you.
Thank you.